It is January the 7th. Good morning. On the agenda, Venezuela sends Trump some crude. The White House doubles down on Greenland, and Nvidia raises the stakes in Vegas.
Tom, let's check the markets then. With all of that in mind, oil prices on the back foot as President Trump says that millions of barrels of oil are going from Venezuela into the United States. There's less enthusiasm today for Chinese tech, for Asia technology narratives after a really strong start to the year. Japan is a little bit weaker on the back of tensions with China. All of that adds up to a flat to positive expectation for European stocks at the open. The countdown to the opening trade starts right now.
Wednesday morning. Good morning. How are you doing? Let's talk about what's happening in the crude market right now. Anna's just been talking about it. Crude is lower. The reason for that, it looks as if Venezuela, Caracas, is going to send Trump some crude. Do we believe that this is what this was all really about? Certainly Trump would like lower oil prices, and maybe he's going to get them. We are flirting with 55 on TI. We haven't been there since 2021. This is a fairly decent-sized move. One of the big macro risk factors out there for the macro hedge funds, certainly on their radar this year. Up to 50 million barrels could be going. That's roughly $2.8 million, $2.8 billion. I need to get that number right. This is an interesting story. Basically, this feels like this is what this is about.
Yes, certainly there's a lot of news flow around it, and the administration very quick to jump to the subject of oil very soon after capturing Nicolas Maduro, of course. Is this structural? Is this just a one-time thing, or is this something more structural? Maybe that makes it more interesting, the relationship with China. Other media in the United States reporting that the White House is also calling on the Venezuelans not to do business with others and to try and reduce their reliance on China, Iran, Russia and Cuba. This all seems to be coming together as some kind of dominance of the Western Hemisphere narrative.
The question of oil and to what extent this is short-term or long-term remains, and the idea that you still need billions of dollars to invest to get that capacity. The tankers have been filling up. The storage capacity in Venezuela has been filling up, so they need to ship some of this oil. Otherwise, they're going to be shutting down rigs in Venezuela. It's something presumably President Trump and Chevron don't want to see. And Chevron has about 11 ships heading towards those government-controlled ports. But it still doesn't answer the question about the long-term viability of getting more oil out of Venezuela structurally into and onto the west coast of the US.
Sure, that's the longer-term story. Yeah. That's years and years and years in the making. But short-term, it feels like there's going to be more crude that was sanctioned that's now not sanctioned,
and that's why oil
coming onto the market,
dropped.
Which is why crude is down.
Yes, exactly. But talking about those sanctions, it's interesting because the Americans are still chasing some of these shadow fleets. Bella 1, for example, making its way across the Atlantic now, according to the Wall Street Journal, is getting a Russian submarine escort. But
that fits with the narrative that Tom's talking about, the fact that the dark fleet's evaporated. Chevron's now chartering vessels to go. This feels like it's going to be a legitimate trade now. All of those ships have departed. The US ships are going to be going in, and they're going to be bringing crude back to America, which will lower prices, which is what Trump wants going into the midterms.
So we're watching the echoes, the ripple effects of what happened over the weekend in Venezuela impact on the oil market then this morning. We're also keeping one geopolitical eye on everything that's going on with regards to Greenland. The White House not ruling out use of force. That's one way you can interpret what we heard from Caroline Leavitt yesterday at the White House. Other reporting seeming to suggest this is just one of a whole suite of ideas and measures and policies that could be engaged to try and get what the United States wants here, which is more access. Could it be buying Greenland? That's according to some reports. Could it be some sort of associate relationship with Greenland? The Danes have asked for a meeting with Marco Rubio to try and get to the bottom of a misunderstanding, they call it.
They've rallied the wagons, haven't they, around Greenland and around Denmark. I'm talking about France, of course. I'm talking about Italy and the UK as well, all coming out with supportive statements. Largely unsurprising, you've had the similar moves and statements from Finland and Sweden as well. The idea of military action in Greenland seems so far-fetched. There is a military presence, of course, but it's fascinating that this is happening at a time when conversations are happening in terms of the US support for Ukraine. And interestingly, it seems like France, the UK and Ukraine have managed to eke out more solid concrete commitments from the US when it comes to supporting Ukraine if they get that peace deal.
An invasion of Greenland was not on the radar. So it's not even on. It's not even
some colour.
It's not even
wasn't it?
Precisely. It's not even a tail risk. But it's now a tail risk. And you have to price it, therefore.
Is there a trade?
How do you price it?
Is there a trade around the krona?
So I don't know. What do you do? How do you?
Well, defence stocks have been moving on something.
Maybe that's it.
Do you need to buy enthusiasm for that sector?
Do you need to buy more European if you are Europe, if you need to defend Europe because you're worried about the fact that it's America that's invaded Greenland. I don't know.
We will talk, we've got a defence analyst coming up later in the programme. I was certainly taken by the Defence Department comments saying that the commercial ties is what this is all about. And their emphasis saying that there's a common interest in tackling increased activity from adversaries in the Arctic. So emphasising that there is still some common ground between NATO members. Shall we have some light relief from that?
Yes.
About technology?
Defence to AI. The two are being embedded, which is a frightening prospect. We have CS continuing, and Jensen Huang once again kind of dominating really the conversation.
Yeah.
He had a press conference. He was asked about that revenue forecast back in October of $500 billion by the end of 2026 fiscal year, and he said we're looking, and I'm paraphrasing, but essentially saying that is looking very healthy, and we're kind of looking beyond that right now. We had similar comments from the CFO speaking at a separate event, saying that there is increased demand for data processing separate to AI. So those things converging to suggest that Nvidia still remains pretty bullish in terms of the demand that it's seeing into and through 2026.
Is that the story, or is this memory chip story?
Which is wild.
Which is just the numbers are unbelievable in terms of the share price performances that we're seeing. Samsung's talking about shortages. Samsung's talking about having to raise prices for consumers. So this is potentially inflationary. I don't know how long that would take, but I'm assuming quite quick. It would feed through into the supply chain.
Yeah.
But the numbers are unbelievable.
So we're showing on our screens that the rally that we've seen in the memory chip companies, and that is where the gains are. And all of this is hanging on the coattails of everything that Jensen Huang says about what the AI revolution needs next. So it needs more memory, apparently. What it doesn't need is cooling of data centres, and we see that sector very much on the back foot.
Yeah, took a big hit yesterday on the back of those comments. So you have to pass the comments from Jensen Huang, you lift the lid, and it becomes really interesting across the sector. It's high bandwidth memory, which is produced by the likes of SK Hynix and Samsung. They only got their approval, Samsung, towards the end of last year from Nvidia, so there's a bit of a backlog there. The inflationary risks are certainly a question mark when you build in what we see with commodity prices as well. Are we underestimating potential inflation for 2026 on the back of what's happening with electronics, on the back of what's happening with commodity prices? And then there's the companies like SeaDisk, of course, Sandisk, I should say, that actually have flash memory, and they've seen a massive rally in their stock price as well, and far outperforming Nvidia and AMD.
Yeah, so lots of detail in the tech story. We'll get to that later. Lots to talk about then with all of our guests this morning. Kit Jukes will be with us, Societe Generale's chief FX strategist. How does the dollar perform through all of this geopolitical tension? We will get into that conversation. Ben Barringer is with us, so we will talk about tech. Quilter Cheviot, head of technology research and investment strategist, the Nvidia lines, the memory, the cooling of data centres and tech more broadly. Sharon Bell will be with us, Goldman Sachs senior European equity strategist. Is there something to be made of the AI trade from an equity perspective? And Simon Hussain will be with us, Alpha Value equity research analyst, talking defence stocks. We will try to get into some of the detail around what is and is not expected by those in the defence sector.
And on the day, but the macro data with Italy and Euro area CPI inflation data then out at 10 a.m. UK time. At 1:15 p.m. we get the ADP employment data out of the US, and then importantly, of course, jobs opening. So Jolts and the ISM Services, but it's Jolts really that will arguably take more of the focus. That's 3 p.m. UK time as we build up, of course, non-farm payrolls on Friday. And we will be hearing from Michelle Bowman, of course, of the Fed as well later today. So interesting to pass her comments as we get a little bit more detail on the US jobs market.
There was some weak data, wasn't there, yesterday? Services data out the US, which just at the margin increased expectations of rate cuts.
It was quite old data, though.
Yes, quite old, and we're still dealing with data that's a bit, damaged, I suppose, as much of it was at the end of 2025.
We get into the real stuff, as you say, kind of. We now get into the real stuff. What kind of a number do you need to see Friday to take the Fed off the table in the near term, I think is the question. The whisper number at the moment, so the whisper number, we've been watching this for the last couple of days, is ticking a little bit higher. The survey number 65, the whisper number was 40-something yesterday, it's now 52. So it's beginning to push a little bit higher. Maybe an expectation that the US economy is actually doing okay right now is one that starts to materialise at the beginning of this year.
I thought it was interesting. We're seeing quite a big surge. I mean, it's typical of this time of year, but a big surge in corporate issuance. Lots of companies back in the market, raising money, European, Asian, US companies in the dollar market, raising corporate funding, corporate debt. And that struck me as interesting. If you're expecting rates to come down further, or maybe you're not expecting rates to come down much further, and so you get on with it now. But yeah, start of the year, start of school. back to that kind
and
of narrative.
So far, the issuance has been well absorbed, but we'll see if that continues through 2026.
And some of it to fund data centres, no doubt, but there are other things apparently to spend money on.
Well, there's a lot of roll, so there's a lot of refinancing that needs to happen. What else do you need to know? What is it, Wednesday morning? Let's talk about what we're seeing. AMD shares trading a little lower overnight, despite CEO Lisa Su's comments that demand is soaring. Speaking to Bloomberg, Su said that more widespread use of artificial intelligence in 26 will help overcome concerns of some investors.
We like to say that AI is really going to be everywhere, and it's really for everyone. And it's for each one of us to make our businesses more productive, each one of us more productive, going forward. And so we're still in the very early innings of really unlocking the power of AI.
Sticking with the theme, Hyundai Motors shares soaring in the Asian session on speculation that a meeting between the firm's executive chair and Nvidia's CEO Jensen Huang might signal a deeper relationship emerging between the two companies. South Korea news outlets said the meeting could be an indication of cooperation on autonomous driving. The discussions would have taken place immediately after Nvidia unveiled its new AI autonomous driving platform at CES. And nickel retreating a little from the highest level in 19 months as a strong rally that lifted base metals took a breather. 3-month futures declined after spiking as much as 10.5% on Tuesday. That intraday surge was driven by supply concerns, amongst other things, from top producer Indonesia. It was the largest gain since late 2022.
Coming up on the programme, as the White House doubles down on President Trump's Greenland comments, we will get a closer look at why the Commander-in-Chief is so interested in the Danish territory. Plus, we will say across European chip stocks after Jensen Huang's, he's delivered, of course, this robust outlook for the sector, for his business. Up next, while geopolitics and tech dominate the start of the year, we'll look ahead to other potential risks and risk events on the horizon for markets. If you have any questions, if you want to get involved in any of these conversations around the desk, IB plus BBTV Go is the function this morning and every morning on the Bloomberg terminal. This is Bloomberg.
When memory prices go up, it's going to have an impact on the price of products, right? So I don't think we're immune to those issues.
When are we going to see that transfer?
Prices are going up, even as we speak. So, obviously we don't want to convey that burden to the consumers, but we're going to be at a point where we have to actually consider repricing our products.
That sounds like inflation to me. Samsung's president, Wonjin speaking at CES, talking to Bloomberg, talking about the fact that the memory chip story has gone, as Tom was saying, wild moves over the last few days. Memory chip stocks certainly on the move yesterday. The S&P pushed higher as a result of that. Let's bring in Valerie Titel for more. Inflation?
You tie everything to inflation. Let's talk about the bullishness in the equity market. Yesterday, it was the first record for the S&P 500 for the 2026. Yes, some of it was led by these chip names, these memory names you mentioned, but it was quite a broad rally. If you look at the equal weight component of the index that actually outperformed, it was up double what the S&P 500 was. So it was a broad rally. Small caps participated as well. But yes, a lot of attention on what's going on in tech, especially with some of these memory players, the likes of Micron up 10% in the session yesterday. SanDisk, which was already up 500% last year, is up another 50% nearly year to date, just in 2026.
It's
just
the 7th of January. Let's just kind of recap that.
Yeah. So this squeeze or this anticipated supply shortage in the memory chip sector.
Yeah.
It's really something investors are focusing on. One of the main reasons why, Asia Tech has outperformed. The Kospi is very overweight, not just chips, but these memory chip players. There is another catalyst to keep in mind. We do hear from Samsung tomorrow. They will be releasing their preliminary results. Analysts are expecting to see a double operating profit for the December quarter, but the real focus will be on their guidance when it comes to memory prices for the next few quarters, the next year.
I've got one of those drawers. You pull it open, it's full of these old dusty Sandisk thumb drives.
I've got those.
I think
as
it's
well.
a secondary market.
I've got boxes of those.
Secondary market for those.
Collector's item.
Yeah. Now slightly more high valued. There's also the tariff. Guy was talking about inflation. Obviously, a big theme in 2025 is the fact that tariffs were not as inflationary as many economists thought. We get a ruling this week. How are the markets pricing around? It could be pretty significant. This is Supreme Court ruling on Trump's tariff agenda.
Yes. So this is coming on Friday. The Supreme Court announced yesterday that they will be sitting for opinions, and the conclusion
is possibly coming on Friday.
Yes, the conclusion is that they'll likely be releasing their opinion on tariffs, given they fast-tracked this decision. Now, we had a glimpse of maybe the market reaction yesterday. We did see Treasuries weaken when this was announced. So I think the conclusion out there is if IEEPA is struck down, if reciprocal tariffs are struck down, and the U.S. government needs to repay tariff revenue, that leaves a hole in the deficit. Perhaps more Treasury issuance is on the cards. So the weakness in the Treasury market.
Is that fiscal stimulus? If you give money back to the economy, is that fiscal?
Well, look, I think there is going to be a lot of nuance in this decision. They could kick some of the decision back down to lower courts. It's really not going to be a clear trade, but that seems to have happened every time that the market gets worried that reciprocal tariffs get struck down. We do see weakness in the Treasury market, but still a lot of questions on how the Supreme Court will handle this.
And it might depend on how the administration responds with attempts to replace these tariffs with others, if that's necessary. Let's talk about where all of that has left expectations about the Fed and rate cuts.
Yeah, so we have non-farm payrolls on Friday. There was a very interesting trade in the market yesterday, the largest ever Fed fund futures block trade. It was on January Fed funds. It appeared to be an unwind of a long position. So I think the market is really starting to entertain this idea that we can have the Fed on pause for a long time. There's no immediate need for a cut. Perhaps this is a Fed on pause until we get the new Fed chair seated in May and the decision afterwards in June.
So could that be on the pay? Is that a positioning ahead of the payrolls or a positioning ahead of the Supreme Court?
Perhaps an unwind ahead of the payroll decision. That would be my conclusion. But again, yes, how the tariffs played into this as well will affect how the Fed thinks about tariff-induced inflation next year.
Valerie, thank you very much. Bloomberg's Valerie Teitel joining us now with thoughts on the FX markets. Kit Dukes, Chief FX Strategist at Societe Generale. Kit, good morning to you. Happy 2026. I feel Val has set us up for a conversation that could go in any number of directions, so I'll give you a choice. Are you more interested in all the geopolitical tensions, tech stocks rallying, Fed narrative, fiscal stimulus this year, the Supreme Court ruling? From an FX perspective, what matters most? What are you watching right now?
All of it, obviously. This is the foreign exchange market. I mean, maybe for the rest of this week, as we come into this barrage of labour market numbers, we're going to refocus on the mundane and the fact that, the only way the dollar goes down this year is if the Fed is easing as much as the market thinks and the economy's slowing. So for the dollar to go down this year, particularly now when the market's been shorting dollars going into the year, you have to believe that the equity market doesn't just keep on doing this, that they don't ease fiscal policy by handing loads of money back to some consumers, and so on and so forth. So right now, I'm sort of prepped in my mind for saying, at this point in a K-shaped economy generating this much wealth, 20, 30, 40, 50, 60,000 jobs a month being created is kind of okay. It's nearly full employment. Wage growth is quite strong. It's not nice at a social level. There's two parts to the K. But if you tell me instead of that, actually, it's all booming.
Yes.
So,
but does that mean you look at the US or you look elsewhere? Because if the US is doing well, sometimes people look elsewhere. Plus, there's the geopolitical,
I think in terms of the dollar right now, I look mostly at the US to say the market is taking a bet on the idea that the Fed's going to cut rates a fair amount and that's going to weaken the dollar, partly because Donald Trump wants it as a starting point. I say, well, OK, that's not possible if the economy grows 3% or 2%. But I mean, let's, pick a number. And is the economy going to slow just because the labour market's soft? Well, we were worried about, an ISM number. We're going to get more information now. If the economy's robust, then we're not going to get a much weaker dollar this year. Frankly, I think that's the simple way to put it. Around the rest of it, if I've still got an AI boom going on, if I've still got geopolitical uncertainty, if I still don't understand, if I don't understand what's happening in Greenland, all of that just plays to I'm not very keen on the geopolitical consequences of any of this for Europe.
OK. You just made me flip my questions. therefore, so what gets the euro lower from here? Is it a stronger dollar, or is it all of that? It kind of feels like that feels different to me.
Yeah. So the stronger dollar story's kind of last year's story, just continuing.
Okay.
I say last, or the more general theme of the focus being on the US. So if the US economy does well and they don't cut rates, I'm just going to have a stronger dollar. Let's, whatever Donald Trump wants. The geopolitical story is a different one, which is worrying in the sense for Europe of saying, I've got three big nuclear superpowers playing diplomacy around the world, and Europe is twiddling its thumbs as far as you can tell.
But the market's long euros.
Yeah, that's a problem for the euro.
Yes. Okay.
Yeah.
What's the best trade on the fact that Trump wants lower crude prices?
The best trade on the fact that Trump wants lower crude prices, you have to be sure that he can deliver them more than we've already got, because we've got lower crude prices. Traditionally it benefits the yen, but we're emotionally sort of struggling with that a little bit right now.
Yep.
With debt
you have
concerns.
A lot of thoughts on that.
Yeah,
yes.
It's not necessarily good for the dollar, but I think it's basically neutral crude at this point, because we've had cheaper oil for a while now. Every oil. I mean, the minute that the Americans went into Venezuela, everyone's looking around saying, well, why would you want the world's most expensive oil to get out at the time when oil prices are here? I mean, leave it there for a bit, guys. This isn't the time. So I don't think the oil price is an FX mover today.
Okay. Kit, I want to get your views on sterling, but before I do, on geopolitics and on the spheres of influence positioning by the Trump administration, does that undermine the dollar longer term, or does that support the dollar as a flight to safety hedge?
It depends how it plays out. I mean, so there is. So putatively, if we, the rest of the world, so the US is the world's biggest receiver of investment money, and the rest of us are all saving like crazy to invest in the US. If we decide that we've got better things to do by rearming ourselves, by protecting ourselves from the rest of the world, by boosting domestic, by becoming more insular, then in the long run that's going to be very bad for the dollar. In the short run, if all the world's best investment opportunities are in the dollar, then I'm not sure that there's an easy path for a weaker dollar out of that.
On sterling, then, 8% gains, almost 8% last year versus the US dollar. Is that a theme that continues, or is the pound looking a little stretched?
It's going to look stretched. I mean, you never meet a sterling bull. I mean, you meet more sterling bears before breakfast nearly every day than you can.
And that's in London.
And yes, and I can find more of them in America than I can find here. So take it as a given. The market is short sterling, long euros going into this new year. The rest is history, as it were. But in terms of we're short. So what overall we're short dollars, we're short sterling even more. We're looking at the euro, thinking, what was it that made us have all of these in our pockets at this point? And so the pound is having a good run, and it'll have a good run. I mean, I read the first piece yesterday that I've seen of someone saying, on LinkedIn, and I'll remember his name, but the UK economy is going to do better than people think because wage growth is still holding up. And I thought, it's you
that's all down to Guy Johnson, by the way, the Waitrose element. Definitely not a little man.
I have nothing to say on this. You should see my grocery bill is the only thing I will say.
That's fine. But yeah, so I think sterling, in that sense, it'll go a little bit further. But I'm going to start buying my holiday money soon.
Okay.
That's wise advice at the start of 2026.
Like
Thank you, Kit.
Can I just say that Kit goes to Devon on holiday? I'm just going.
What will they be spending in Devon, I wonder, by the summer?
Okay.
Clotted cream, is that a Devonshire thing?
Pasties.
Kit Chooks. Pasties. There you go. Kit Chooks, thank you very much indeed. Chief FX Strategist at SocGen. Nvidia coming up. This is Bloomberg.
Wednesday the 7th, 30 minutes ago until the opening trade. I've just read a note from Richard Windsor, who is in Vegas at CES, talking about AI toothbrushes, and now that's all I can think about, to be honest, and what that will mean for our future. But in the meantime, we probably should check what's happening with these markets. The AI story is still front and centre. The chip story is still front and centre. Maybe less so in Europe. We are mixed, as you can see. 50's up, FTSE's down. CAC futures are up by a little bit, 0.4%. The bond markets, what's the bond market doing?
The bond market is, well, let's have a look at where European rates are right now. A little bit of a movement down in those yields, a bit of buying of the European debt markets just at the margin. Over in the United States, we see those yields coming down just a touch. 4.15 is where we trade on the US 10-year. Tom.
OK, let's get back to tech. Maybe not Guy's obsession with AI toothbrushes.
AI toothbrushes.
Turning to tech, Nvidia CEO Jensen Huang says its October revenue forecast of about $500 billion for 2026 has grown on stronger demand. Speaking at the CES show in Las Vegas, of course, Huang did not provide a new figure, but pointed to large custom deals and increasing uptake of new AI models for the brighter outlook.
Hopper pricing is actually going up in the cloud. All of the hoppers are consumed in the cloud, and now spot pricing is starting to go up. And so that tells you about the demand that's being generated all over the world. So H200s, I think, is going to contribute also to that. And I think all told, I think we should have a very good year.
Let's bring in, at this point, Ben Barringer, then, Global Head of Technology Research at Investment Strategist at Quilter Cheviot. Ben, thanks for your time. From what you've heard from Jensen Huang, are you more or less positive about the prospects for Nvidia for 2026, given the stock is down about 8% since this record high back on October the 29th?
Yeah, look, I think incrementally slightly more positive, but there were no real big financial target updates in here. I think there are three things to think about. Firstly, there were no big financial updates. Second of all, in terms of the data center, there's plenty of incremental little data points. But for example, Rubin production has started, and that looks very much on track. We've had largely those data center specs before, so that all looks pretty good, and the supply chain looks in better shape than it did in Blackwell. Rubin is less of a leap, if you will, in terms of the supply chain, although HBM is still quite tight. But then the third piece, and this is, remember, this is the Consumer Electronics Show. It's not all about data centers. Jensen very much wanted to talk about physical AI, as he has done before. So there were lots of good announcements around automotive, around robotics as well. Automotive, I think, is particularly interesting because they've been working on a car with Mercedes for the last 8 years. This year, we're actually going to start to see that car. And so I think that's quite interesting. We can go into some of the technology behind that, but it could potentially be, the sort of Android operating system for cars, software-defined cars. So, yeah, lots for all different audiences to get involved in.
When does that, I'm trying to kind of understand, is this a Jensen Huang who is terrified of the fact that there are now competitors nipping at his heels when it comes to the GPUs, whether that's Alphabet or Amazon or Meta or of course AMD itself? Or is the embedded AI, the robotics AI, the autonomous vehicles, is that when does that become real in terms of material impact for revenues for Nvidia? Is that a 2026 story?
It's not a 26 story, but you can actually, in this year, you're going to be able to drive a Mercedes CLA, which will have a full Nvidia stack in it. And so it's starting to produce revenue rather than just being a sort of a pipe dream. Just to go back to, sort of data center, obviously if you think about Jensen's whole strategy, it's all about diversification, right? So diversification of end market demand, data centers, and trying to, not allow one hyperscaler to dominate, but then also diversifying that data center demand. Then in terms of, physical AI and getting more GPUs into lots of types of compute. He's also got the same diversification strategy with his supply chain as well. He doesn't want to be beholden to Hynix, for example, for HBM memory. So, look, think of it as a diversification strategy. There are people nipping at his heels, as you say, but I think it's much more about him trying to get GPUs everywhere rather than just in data center.
Ben, good morning. So sticking with the car theme for just a moment, the physical AI and what we might see on our roads, why should I get excited about Nvidia stack in a car? I mean, you can already go in a Waymo self-driving car, which doesn't maybe have the same technology. But so what difference will this technology make?
Well, look, so one, this is just, you can buy the, like I say, the Android system is a good analogy, because it's basically, you can use it and then the OEMs, the brands, the car manufacturers can produce their own versions of it and use it. But Nvidia still controls, if you will, the software, as opposed to Tesla, which is a much more sort of closed system. The other thing that's interesting is that the industry has a debate on self-driving about whether you should have a more rules-based driving system, and some of the OEMs and Waymo use more of a rules-based versus a learning-based, and that's very much what Tesla's been doing, and that's what Nvidia's stack Alpha Mayo is trying to do, is much more learnings based. That means that you don't have to contain the car within a geofence, and the car can learn that much quicker. That seems to be the future for the sort of, if you will, the underlying technology.
OK, I was really amused last summer to watch a Waymo trying to navigate a pigeon. Took a very long time. So that's clearly something that's still a work in progress. On data centres, I'm really amazed that we seem to be quite surprised in markets quite often by things that, or certainly in the last couple of days, by some of the things that Jensen Huang has been saying about what the next iteration of his product will need and won't. So less cooling, perhaps, for data centres, but more memory to save the stuff that the AI is throwing out. What's your thinking about how much we are being surprised at the start of 2026, as evidenced by moves in stocks?
Well, look, you can see this in the underlying models. The memory piece is very interesting. When you start to go back to ChatGPT and talk to it, it remembers your previous conversations, and it's building, if you will, a profile. That requires, first of all, lots of DRAM to do a lot more of the inference processing, but it also requires a lot more storage for the longer term. And you've started to see that. I mean, you saw it at the end of 2025, and you've seen it into the beginning of 2026. The memory stocks, Hynix, Samsung, Micron, and particularly SanDisk, which does more sort of long-term storage. Those stocks have really been performing extremely well because of this strong demand and relatively limited supply. Remember, semiconductors, it always takes a couple of years to produce new fabs and so on. So the pricing has been very strong there, and the continued sentiment in memory continues to be good. Although you've always got to caution in memory, it's very much a cyclical industry, and so there's always going to be a top and a cycle in memory.
Ben, where are you comfortable with tech valuations, and where are you not comfortable with tech valuations?
Yeah, look, we think about 2026, 2027, particularly CapEx growth. That looks like 2026 is probably going to be sort of 30%, maybe 35% growth. 2027 is now shaping up to be sort of 10 to 15% growth. So if I then bring that back to an Nvidia valuation of sort of 24 times, I feel pretty comfortable with that, because the underlying growth is still there for 2027. There are some areas, in sort of the very, very exposed companies to, if you will, the sort of edge areas of AI development. So companies like Palantir and CoreWeave, we don't play in, but companies like Nvidia and of course AMD, we haven't even talked about some of the good announcements that AMD has had. We feel pretty comfortable with. AMD is going to be a reasonably good competitor, I think, towards the end of this year.
One of the arguments I'm increasingly hearing is that big tech is profitable, and therefore these valuations are okay. But what I'm wondering is, which bit of big tech is profitable? And it feels like it's kind of, if you're looking at Alphabet, it's kind of various bits of the business, but a lot of it's based on kind of ad revenue and all those kinds of bits of the businesses, which throw off a lot of money and are profitable. But I do wonder whether that bit of if you was put that bit of the business on a kind of realistic multiple for the profitable bit, do you get to the valuation you have now? How good is the market at differentiating the different bits of big tech right now, a company like Alphabet?
Yeah, look, Alphabet's been a real sort of Marmite stock during 2025, hasn't it? It was an AI loser in the first half and then an AI winner in the second half. I think the sustainability of the growth is what people focus on. For the core advertising business, that went through a period of slight slowing. It's now sort of stabilized in the sort of mid-teens growth rate. And if it can continue that, then I think people give it a reasonable valuation. Similarly, GCP, the cloud business, has been a sort of a small third player in the cloud hyperscale market. Now it seems to be much more credible, and with Google's go-to-market in terms of its analytics and its, particularly good Gemini 3 model, I think that again reassures people. Waymo as well, is sort of rising from sort of 50 billion to probably 100 billion in people's valuations, and so I think people have become that much more discerning. But when there were in the first half of the year, when there was the DOJ threat, there was uncertainty about the outlook for search in an AI world, an open AI. I think people's terminal values for those businesses got sort of were very much uncertain, and so now I think Google is on a much more stable footing, and I think you're right. The sum of the parts can start to shine through.
Ben, great to catch up. Thank you very much indeed for your time. Ben Barringer, Global Head of Technology Research and Investment Strategy at Quilter Chevios. Thank you very much indeed. When do cars don't have steering wheels? When can I go to sleep in the back or go to the pub and not worry about that I've got to be in control? Like it feels, we're still navigating pigeons.
Yes.
I feel we're way away from that.
It took a really long time to get around this pigeon. I mean, I saw plenty of...
This was
in San Francisco.
Videos?
No,
Did you see it live?
This was in San Francisco, yes. Plenty, and we sat in a Waymo and went lots of places very safely. That was a fabulous experience, but I was quite amused by how long it took and how considered and
Would you go to sleep in the back of one?
Ironically thoughtful it seemed to be about the navigation of a pigeon, more so than a human being might have been.
Yes.
We're still a few years away. We will look back, though, in 10 years' time and think, why were we driving around in these incredibly dangerous machines when we have autonomous vehicles that are much safer?
I quite like driving there. Anyway, coming up...
Probably the problem, is it?
That probably, maybe an issue. Never really got rid of that.
The Fiat Punto, isn't it?
Oh, yeah. Going around the corner. Anyway, what are we going to talk about next? President Trump is set to meet with energy executives at the White House.
I'm also meeting with oil companies. Let's go. You know what that's about. We've got a lot of oil to drill, which is going to bring down oil prices even further.
Quite important into the midterms. More on the future of Venezuela's oil industry next. This is Bloomberg. Morning, welcome back. WTI crude currently trading at 56.25. It's down by 1.5%. Brent crude is trading just north of 60. It's down by 1% this morning. This after President Trump said Venezuela will send the United States as much as 50 million barrels of oil, worth, let's call it circa $2.8 billion, which will then be sold at market levels, and the proceeds apparently are going to benefit both countries. Bloomberg energy reporter Anthony DiPaolo joins us now from Dubai. Anthony, oil's down on this. Talk to me about kind of the implications of what is happening here and what it means for the crude market.
Yeah, good morning. We're not seeing really that immediate impact on big supply here. So that's what the oil market is really looking for. And that's what, over these past roughly 2 years or more of geopolitical concern, the oil market has really looked through a lot of the kind of the geopolitical noise to see what is the real impact on barrels. And Venezuela is a big producer, biggest crude reserves, not the easiest ones to produce, and production has been very low. So we're not going to see that huge impact on the market. Plus, a lot of that had been going to China anyway, with some of those barrels that Chevron does produce, as we reported, going into the U.S. and to some of those refineries there that need that heavier crude. So we're really going to have to see some more details on when that crude oil is going to come out. This is kind of a long-term, more bearish story for crude, because it'll take a long time if the U.S. companies do get back in there and begin trying to ramp up production, trying to improve some of those facilities there. It'll be a long time before that oil comes back in the market. So that's a kind of a longer-term issue. Longer term, we are also potentially seeing declines elsewhere because of the lower prices that we're seeing now that impedes investment. So this oil could be coming to the market at a time when demand is increasing, and we're seeing less supply from elsewhere. And we're talking a few years' time for that now, Guy.
Anthony, you mentioned China. Are China and Russia, as of now, currently effectively cut off from Venezuelan oil? And what is the ability for China to find alternative sources? Who benefits in terms of suppliers if China has to switch up?
Yeah, hi, Tom. At the moment, we'll have to see, again, how this plays out and how strong those controls continue. The Trump administration has said de facto that the U.S. is basically controlling Venezuela because they've got that flotilla of vessels off of the coast there. They've been trying to interdict some oil tankers there. So there's a real kind of a physical impediment to that oil getting out and to getting to these other countries. China is being hit from a couple of different ways, really, because we've got the U.S. has got sanctions against Iran. It's pressuring supplies from Russia. Now we're talking about Venezuela, and those are those kind of cheaper supplies, discounted supplies that have been going into China, discounted because they have to get around sanctions, they have to get around legal issues, and so that's kind of hitting China from that point of view. The Trump administration is really taking the viewpoint, and has been taking the viewpoint in various areas, that U.S. economic involvement equates to some kind of U.S. security interest. So if the U.S. has got skin in the game, the idea that this administration has expressed is that the U.S. will be there with kind of some geopolitical or potential military force if there is any interference. So it's really kind of this play to stake a claim to some of the influence there, and trying to get that economic influence of Russia and China out of Venezuela, out of that Western Hemisphere. So that seems to be really the approach there. There are those physical assets there. Again, we'll have to see whether those are used or whether it's that coercion plus the political discussions that carry the day here.
OK, thank you very much, Anthony. Anthony DePaola in Dubai on the oil story. Joining us now, Bloomberg Markets Live, Skylar Montgomery, Koning for 3 minutes on the market. Skylar, good morning to you. So we get inflation data out of the Eurozone. Inflation doesn't seem to have been a problem for a while. And in fact, the German data of yesterday suggests that it might be a problem in the other direction, a little bit lackluster on the inflation front. So what are we expecting?
Yeah, I mean, I think you're exactly right. Inflation's not a significant problem, and so I don't think we will get a huge market reaction. The ECB's been very firm that 2% is their good place. Now, because markets are kind of anxious about what the next cycle looks like, and we haven't had significant economic damage that would usually accompany a kiting cycle, that means they're looking for a hiking cycle next. Now, it's priced 2 years out, so the question is, can that be brought forward to impact market pricing? The issue is there's not really a good reason for it, as in you have your policy rate at the midpoint of neutral, so you're not excessively loose, and you also have inflation, as you say, that's coming down, and today is likely to surprise to the downside if yesterday's inflation prints more regionally are any kind of indication. Now, I think because that hike pricing is so sticky, it means that you need a pretty significant downside in inflation, or more likely growth worries need to come to the fore pretty prominently before you start thinking about cuts again. So it just means that you're a little bit stuck in Europe, and markets can keep looking for what justifies a hike, but there's just not really that evidence.
Are other things moving the euro rather than things that are kind of within the euro's control, i.e. ECB rates, etc., European growth, moving the euro? Kind of what is moving it right now?
Yeah, absolutely. I think rate differentials have been kind of your number one driver in recent periods. And because you're not getting that movement from European rates, you need to look for US or US rates. And I think, it's not only a rate perspective, but also geopolitics we need to think about quite significantly right now. And it's important that the US dollar has returned as a safe haven. So it is getting that bid when we get these bouts of geopolitics. You've also had a lot of US data coming out on a regular schedule now. So we're getting kind of more impactful data because it's actually relevant, or it's time near, and we're thinking about, how many cuts can we get from the Fed? Can we get cuts at all this year? And so we'll get jobs data later today that are kind of the precursor to the more important data on Friday. But, the U.S. side is certainly driving more, and it's against an environment where euro positioning is still very long.
just briefly on yields in Europe, there's a bit of a bid for European sovereign debt today. Are yields kind of capped in Europe? There was a bit of a sell-off that we saw last year on the issuance out of Germany around infrastructure and defence. What is the story in terms of whether or not these yields are capped at this level?
Yeah, I think you're certainly anchored by your policy rate, and I think range trading is what you'll likely see, and part of that is just where is the fair value for yields. I think both at the 10-year and the front end, you're pretty close to that. On the 2-year in particular, if you think about the 2-year trading very closely to the policy rate, then you're 2.1% or wherever we are, it's just slightly above. So that fits with a market that's looking for a hiking cycle next, but isn't really sure of where that's coming, as well as if you just look at like 1-year, 1-month OIS and 2-year, 1-month OIS, being between those two looks about right.
OK, Skylar, fantastic. Thank you very much indeed. MLive's Skylar Montgomery-Koenig, of course, on these markets, inflation, yields, and as we lead up to the data out of Europe. Let's get the stocks to watch now with Chloe Mellet. Chloe.
Good morning, Tom. Ørsted has just filed a legal challenge against the Trump administration order to stop work on a wind project. This is the second legal challenge of this kind from Ørsted in the last few days. And so we should keep an eye on how the market reacts to this continued tension, continued battle between the wind industry and Trump's efforts to roll back those clean energy projects and climate policies. Moving on to UK pubs and hotels, which are lobbying the government for further tax discounts. So business rates were actually lowered at the latest budget, but the fact that properties will be revalued means that bills might actually go up. So let's keep an eye on some of those names up here on the board. Keir Starmer has said that he acknowledges that pubs might struggle, but it seems that the government is so far unwilling to make those changes there and has defended the measures that it had already taken. And finally, it could be a good day for Lufthansa after being double upgraded by Morgan Stanley. Analysts have said that the turnaround is in good shape, that it will start to pay off, and we could see this outperformance here from Lufthansa continue there.
OK, Chloe, thank you very much. Chloe Melly from our stocks team. We'll watch healthcare, best performing sector yesterday, GSK. We had some news. Ferrexpo guy could be in focus as we got news out of Ukraine or around Ukraine, and this is an iron ore mining business in Ukraine.
Security guarantees for Ukraine will provide stability, which will allow businesses like this maybe to have a slightly better time of things going forward. European futures fairly mixed going into the opening trade this morning. As you can see, the FTSE's under a little bit of pressure, some strength elsewhere. The opening trade is next. This is Bloomberg. Couple of minutes to go till the European cash open. 7,000. That's the number you need to be thinking about right now. Big number, nice round number. The S&P's really close to it. We got really close to it yesterday. That's where Europe went out, but the US, the S&P then rallied beyond that. What is interesting actually is the equal weight did even better, which is an interesting trade in itself, in as much as you've got this broadening rally. But 69.44.81 was where we closed yesterday, Tom. 7,000 feels awfully close.
3 straight days of gains for European stocks as well. Futures today pointing to build on that, pointing higher by 0.1% here in Europe. We've got a view from Goldman Sachs coming up that there is further to go in terms of the European stocks rally. We'll unpack that for you, of course, with the guest from Goldman shortly. FTSE 100 futures a little softer by 0.3%. We look at Lufthansa with an upgrade and what that does to the DAX. Futures there pointing to gains of 77 points.
Let's talk about some of the individual stocks in focus then, Tom, and GSK certainly has to be one of those. The UK healthcare business out with some guidance this morning, or some results this morning, I should say, from some key drugs trials. One of their key drugs has helped thwart chronic hepatitis B in trials, and so that could be a positive there. Ferrexpo is interesting. This is an iron ore mining business, does a lot of work in Ukraine, and we have had news flow surrounding Ukraine. It's limited in its detail as to exactly what it is that the US has agreed to provide, but the UK and France talking about boots on the ground if there is some kind of peace deal or some sort of reassurance force. Defence stocks with that same narrative then, perhaps they should be in focus, or are they a little more structural in the drivers behind the appetite for defence rather than attached to the Ukraine news flow so specifically now? But we'll certainly keep all of those, Guy, in focus this morning.
Absolutely. Right, here we go. Time for the Wednesday session. Is the momentum going to fade a little bit today? We had a couple of good days at the beginning of the week, but are we going to start to maybe fade that today? It looks like the FTSE 100 is opening fairly flat. It's going to be interesting to see what the push-pull is within what is happening with the mining space, what's happening with the defence space, some of the pharma news that we've also had out this morning. How that balances out in today's session could be interesting. The Stock 600, nothing to... Nothing, like literally nothing. 0.00 is what we've got. We'll wait for some of the other markets to give us a better steer as to what is happening here. The CAC's expected to be a little positive. There you go, up 0.2%. The IBEX is a little soft, down by 0.1%. Let's wait and see what the DAX delivers in just a moment. But a cautious start after a good few days for European equities. Tom, sectors, what are we seeing?
Yeah, so far on the sector picture, top of the list is construction, up 0.5%. A little bit of pressure coming through, not surprisingly, of course, in energy, given the drop in oil prices, the story around those shipments from Venezuela, at least flagged by President Trump. So energy as a sector is down 1.4%. Food and beverage, travel and leisure is in focus, of course, because of how Lufthansa fits into that. Currently, that sector's down 0.3%. We'll see how that adjusts, of course. On the upside, industrial goods, utilities, so industrial goods, including the defence space, up 0.4%. You're seeing a little bit of a move in terms of the likes of BAE Systems, for example, up 0.8% on the FTSE 100. Rolls-Royce also gaining close to 1%. But on a sector breakdown, currently top of the list is construction. On the downside, again, not a big surprise, energy down 1.4%.
It is interesting that defence names are a little stronger this morning, isn't it? I mean, we have had news flows surrounding Ukraine. We haven't got a lot of detail as to what these supposed US guarantees mean. Steve Witkoff, the envoy, talking about significant progress, largely, but, you know, Russia is not involved in these conversations, so maybe the market still comfortable with loading up on defence stocks, which is what it's been doing since, well, for a long time, but January is it's accelerated that.
Are construction companies going to become the new defence stocks? I.e., that's the next iteration of the Ukraine trade. You've had, I guess, kind of a bit like the Ferrexpo trade this morning. You've got the kind of defence story, which we've already priced. We've seen a huge ramp-up in those stocks over the course of the last year. But if you have to rebuild Ukraine, which are the companies that are going to benefit from that? And is that, as you start to get security guarantees being put in place, could some of these names be the beneficiaries of that?
Yeah, and is it too early for that trade? I don't know, because, yes, if the defence names are not falling back, is it too early for the construction names to rally? But we do have a little bit of that this morning.
Shall we bring in Sharon Bell for a view on that piece?
You can do it, I can do it. If you get a deal in Ukraine, how do I play that?
Yeah, I do agree that construction, building material stocks, things like that would be clear beneficiaries. I'm not sure the defence stocks. I mean, I think their initial reaction may be to sell off, but we know that the world is not a totally safe place. Europe will have to stand increasingly on its own when it comes to defence. All that is absolutely clear. So I see them as a structural story.
OK. You think Americans should buy Europe in 2026?
I think that they don't want to hold everything in dollars and everything in the US and everything in about 6 or 7 companies. This is the problem. If you own the US market, you really own all those things in a very, very concentrated way. So I don't necessarily think that Europe will super outperform in the way it did last year, although it's notable that it did last year. So and it's still much better value, I think, than the US market, but it just gives you that diversification.
OK, so this year is going to be about US investors maybe continuing to load up on things that are not US stocks, or diversify a little bit. That's the expectation.
I mean, we've got similar returns actually in our forecast for this year for the US and Europe. Maybe even actually a little bit better for Europe in dollar terms. So if you're a dollar investor, we still think the dollar has got a little bit further to come down. Therefore, diversifying that exposure will be good.
OK, I was taken by one of the things that you've been referencing recently, Sharon, which is about high labour cost companies and how they have been underperforming recently, and how they are the ones that are set to gain from AI technology. Tell us a bit more about that.
So the thing is, you may think naturally you don't want high labour cost companies. You want companies with low costs and high margins all the time. But higher labour cost companies that typically have lower margins are typically less highly valued than the market. That is true. They're on a discount at the moment. But who will be the big beneficiaries if we get a reasonable economic environment, but wage growth is decelerating? So the labour market is loosening a bit, and there are labour-saving technologies. I mean, AI, absolutely, but not just AI, things like robotics, for example. We know that companies are looking to pursue those. And who would benefit most? It's the companies with very high labour costs.
And do you find this in Europe, or is this a US story?
I think it's a European story. It's a global story. I mean, if you look at, for example, AI skills in job adverts, they're just as high in the UK as they are in the US, for example. So I think that we will be using these new technologies everywhere.
So the secondary and tertiary effects of the AI momentum filters through to Europe. And across different sectors that you look at, I mean, you're positive, for example, on banks and financial services in Europe. Is that also,
absolutely.
In an environment of weaker rates, is that also an AI theme?
I think that banks and financial services have a big sort of potential gain to realise in using better technology, including AI. They're also potential gainers from just all the new companies coming to the market, all the capital markets activity related to AI. So I think they potentially benefit in both ways, capital markets activity and also maybe using it for a greater efficiency.
You've upgraded your benchmark target, the Stock 600 target, to 625. We're currently at, 605. Does that seem a little conservative? What turns you even more constructive?
I know. We've been positive through this last year, but even though I was positive, I had to keep upping those targets. We do think we're in the kind of optimism phase of the cycle, where you're getting some earnings growth, but actually the market goes through a period of re-rating, effectively. We are at quite high valuations. We did up our targets, but I think that's just a reflection of the macro environment, which, on the geopolitical front, certainly risky. But if you look at the sort of underlying GDP growth, interest rate environment we're forecasting, it's a little bit better. We've got inflation coming down. We've talked about energy prices coming down. It's a big component.
Do I just park geopolitics? There seems to be so much of it, but I don't know what to do with it because it's so hard.
Maybe that's what the market is deciding too. And I think there's not just geopolitics. I was looking, for example, at the end of last year, we had the longest US government shutdown ever. And yet the market, looked through that, really. So I do agree that unless there's a kind of clear economic implication that you can read through, and maybe there is for, say, energy prices, then the market is going to look through that. Having said that, there is one asset where you're clearly seeing the impact of this heightened geopolitical risk, and that's gold.
Yes.
So we had 50-plus all-time highs for gold last year. And I think that is a little bit of a reflection. It's a reflection of lots of things. Diversification story. Asia central banks in particular wanted to diversify into this asset. But it's also a reflection of geopolitical risk.
Do I keep buying? It was interesting. We had Evie Hambro a few days ago here talking about he just sees this carrying on. He thinks the gold miners are the margins are going to be epic. There's lots of them in Europe. Is that an area?
The miners, and that's one of the reasons I saw your screen earlier. It's odd to me to see FTSE 100 above 10,000.
Yeah.
And
you're going to need another decimal, another space for a number.
And I think that the miners are a component of that as well. But yes, I do think that. I mean, we actually not necessarily to an overweight because I think a little bit more expensive now, but we moved up basic resources, which is where all the miners sit in our recommendations. We got that wrong at the end of last year. We were underweight, moved it up to a neutral. I think it's difficult to really bet strongly against them now.
And it isn't just gold, is it? I mean, there's the precious metal story, but we seem to spend daily. It's either copper or it's nickel or it's, some other metal that's doing really well. I was going to say iron ore. That's been a bit more mixed. But there's a broad... If you look at some of these baskets of sort of 6 metals doing really well, multi-year highs, nearly 4-year highs, I think, for those kind of... So would that be something you'll look again at as we go, if that performance continues?
Look, I think that we haven't had a lot. One of the big issues with the industry is they haven't invested in recent years, but because they haven't invested, there's no supply, additional supply. So if there is more demand globally, and there's so much investment going on, we see it in defence, we see it in data centres, we see it in so many different elements that governments are spending, companies are spending. There's a lot more capital going in. Technology used to be a very capital light area. Now it's a capital heavy area. All of those things, huge global demand for more commodities related assets. And that's really the lack of supply is pushing up the price.
What's your level of conviction around small caps, European small caps for 2026?
Yeah, I'd say reasonably high. I mean, we argued that this year, actually, all things come together for them. They become aligned for them. And you really need that for small caps to do well. Small caps won't just do well if one element is there. You need everything there. And when I say everything, I mean better economic growth. Small caps tend to be more cyclical. You need currencies in Europe to be going up. They're not so international, so they're not dollar earners, they're euro earners or they're sterling earners. They do better from that. You need M&A picking up. And I do think M&A has started to pick up and will continue to. And that tends to lift all small and mid caps.
Are we underpricing closer UK-EU alignment and what that could do for small caps?
That would help a little bit for small caps, but I don't think that will be a main driver for me.
I saw Brexit, the word, in at least one research note yesterday, which gave me flashbacks. What about the China narrative and how that plays into Europe? Because there's been... You tell us not to worry too much about Chinese competition as far as European stocks are concerned.
Absolutely. I think there's a kind of natural knee-jerk view that China export, and it is an export juggernaut now, manufacturing globally, pushing down prices, exporting, taking market share. Who is that going to hit? Maybe Germany, who's a big exporter, big manufacturer, very, very obvious hit. And yet the DAX did as well outperform the S&P last year. So it's not a clear read-through from China competition through to Germany underperforming. But I do think two sectors are hit most, and that's autos and chemicals. And they will continue to struggle in Europe.
The debate at the moment, the hot debate at the moment, are we in a tape bubble? And if that bubble bursts, what are the implications of it? Do all stocks go down in that environment? Is Europe a place to hide? What is Europe useful for at the moment?
You know, we started this conversation about diversifying. If you're a particular US investor into Europe, and I do think it's an interesting trade. If you look back this time last year, when we had a kind of deep-seek crisis for the AI stocks, people were worried about the returns that you would get. Maybe new, more efficient models, cheaper, etc., could come through. Europe actually outperformed over that period. And in fact, when US stocks were falling, was rising. So yes, I do think it's diversification.
It's an absolute trade, not just a relative trade.
Now, to be fair, there was also talk about German fiscal spend at the time. That was definitely helping the Europe trade. So there was something specific going on. But yes, I do think Europe provides a bit of that diversification from the AI trade.
Is Asia better at it than Europe is at it?
Diversifying, I mean, I do think Asia offers a different place and a different way to diversify. And there's some, you've got restructuring stories, for example, in places like Korea and Japan, which are very interesting. You've got a very different story in China, maybe still a value story in China, more so than Europe. So there are different opportunities in Asia, but I think Europe does too.
Nice to see you.
Thank you.
Interesting conversation. Sharon Bell, Senior European Equity Strategist, joining us from Goldman Sachs. Let's take a look at what the Core 6 looks like this Wednesday morning. This is the story that we find ourselves with. Defence stocks are on the front foot once again. You see that across Germany, France and into the UK as well. It's interesting that Schneider is actually a little higher. Some of the cooling stock stories are down this morning in Europe. We saw that yesterday. Chloe's going to talk about it in just a moment. Schneider is a power component part of that data centre story as well, but is actually higher. Novo, after a decent run over the last couple of days, softening up a little bit. Luxury's down a little bit. And when it comes to the staples, I'm not sure you can call Nestle a staple, but it's down by 0.9% of 1%. But there's interesting stories in oil this morning. There's interesting stories in cooling this morning. There's some interesting stock stories that I think Chloe Melly get her teeth into.
Good morning, Guy. Indeed, we are seeing a lot of weakness across those oil stocks this morning. That is because oil prices fell after Trump said that Venezuela would be giving some crude oil to the U.S. And so we are seeing that reflected in those shares today. And in particular, we are seeing BP be quite weak this morning. We're down about 2.5%. Moving on to Lufthansa, which is up this morning after being double upgraded by Morgan Stanley. We are seeing Lufthansa up about 2% this morning. The analysts have said that the ongoing turnaround at Lufthansa would really provide a big earnings boost. And so this is quite a positive story there. This is a company that's already been outperforming some of those airline peers. And so this double upgrade is only a further boost. Moving on to Volvo Car, which was initiated with a sell rating by Citi analysts. And that is weighing on that stock this morning. Analysts have said that this is a company that lacks some of the scale that some of its peers have, and that a lot of the stock rally rally was dependent on one-off items and therefore was not necessarily sustainable. And so we are seeing shares are down about 3% this morning for Volvo Car. And finally, we are talking about this cooling story that you were mentioning, Guy, with Mulls, which is down 7.4%. That is after Nvidia's CEO said that cooling technologies might not be as much of a need for them going forward. And so we are seeing those comments really weighing on some Asian and US stocks in that cooling space, and also here in Europe with Mulls, which is taking quite the hit on the back of that.
OK, our equities reporter Chloe Mellett on some of the individual names on the move this Wednesday. Chloe, thank you. Coming up, we'll continue the focus on individual corporates. GSK out with some positive phase 3 trial results on a treatment for hepatitis B, and reports of Eli Lilly in a $1 billion biotech deal. Your pharma update is next. This is Bloomberg.
Welcome back. You're watching the opening trade. We are 18 minutes into the session, and this is what it looks like. I think sort of the indexes are fairly split. Therefore, probably actually what you're looking at is what's happening below the indexes to tell you what is happening at a sector level and what is happening more broadly at a single stock level. There's some interesting stock stories that are out there this morning. One of them comes from the pharma space.
Absolutely it does. UK-headquartered pharma giant GSK, GlaxoSmithKline, says an experimental drug has helped bring chronic hepatitis B under control in 2 studies. Joining us now, Sam Fazeli, Director of Research for Global Industries at Bloomberg Intelligence. Now, Sam, I won't be discouraged by the fact that the stock's only up by 0.1% this morning. For those that this matters to, I'm sure this matters a lot. But give us some size and scope around how important this is for GSK.
Sure, but just before that, the 0.1%, £19. I don't think this stock has seen £19 for a long, long time.
Right.
So we need to get that chart up to have a quick look. It's been a while. So, look, this is a drug for hepatitis B, and I think it's been in the news if you look back in the US, where they're contesting the use of early vaccinations against hepatitis B for infants, right? Here, if your child's born, as soon as it's born, it gets a hepatitis B shot.
Yeah.
Over in the US, they've just changed that. They don't want that anymore. So that might mean that in the longer term, you're going to see some more Hep B infections, which is not really the what you want here. But here, the drug bepirovirsen, we talked about this, right?
Yeah.
Even the people who like these kind of names would call it Bepi, much easier, right?
Yep.
So this is something that the company says £2 billion peak sales. You never know when peak sales are. If you look at estimates, consensus at about £500 million in 2031 or 2030, and that's about 1.5% of the company's total expected sales. So not a big jump. We don't know the data, but it might be a really clinically meaningful drug.
So you set us a challenge. We showed a chart of GSK. It didn't quite go back to the last time it was up above £19, Sam, but it was around the early 2000s, according to the chart on my screen. So, yeah.
It's been a while.
There's been a spin out since then as well. So
there has been a spin out. There has been. Absolutely.
This is kind of X-spin.
Yeah.
OK, I'm going to take the bait. OK. What was the name?
Bepirovirsen.
OK, so you've been practicing that. Tom's been practicing that.
You forgot.
We're going to have a little divergence here from the script. What does that tell me about what kind of drug it is, and why is that important? Because we spend our life trying to pronounce, avoiding saying these names.
It's obviously super important for investors to know this. But all these drug names, the pharmacologic names, signify how the drug works or what class of drug it is.
Right.
So if you must have come across a whole bunch of stuff called glutides.
Yes, that sounds easy to say.
Tirzepatide.
Okay.
If you notice, they all end in the same wording, and it tells you a little bit about what their function is or what drug class they belong to.
Okay.
Here, Ursin, it tells you that it's an antisense drug.
Okay.
Which is a small piece of DNA.
These names? So
there is a pharmacopoeia, the committee that comes up with these names, and they're all highly regulated. You can't just put your first child's name on a drug. Although that would
it's not just a collection of consonants, which is sometimes how it looks.
These names are extraordinary sometimes.
The beginning of the names can be, right? So natalizumab It kind of suggests to you that there's somebody called Natalie that might have been involved in that, right? But the Zoom app tells you exactly what kind of class of drug it is.
Okay. I like the idea.
So that's where it goes.
You can't just name a drug Bob. Bob 1, Bob 2, Bob 3.
They used to do that with planets.
That would make
things like that, but yeah.
But it's always an education with Sam Fazeli. Sam, thank you very much indeed. Sam Fazeli, Director of Research for Global Industries at Bloomberg Intelligence. £19. There you go on GSK on the back of those developments. Meanwhile, Siemens and Nvidia have announced an expansion of their partnership using AI to transform industrial systems. They plan to launch the first fully AI-driven manufacturing sites this year. The CEO spoke exclusively with Bloomberg's Ed Ludlow about that collaboration.
We're announcing a big partnership between us. We've known each other for a long time, but the partnership we're announcing is really a big deal. One, we're accelerating their EDA software. We're accelerating their simulation software. We're integrating AI technology, physical AI and agentic AI, into their team center and their factory automation operating system. And so we're working together across this entire spectrum. When we accelerate the software, then we'll get to use it to design our chips and systems. When we accelerate their simulation software, we'll use it in our AI factories to simulate the thermal properties of our AI factories. When we integrate our automation and agentic systems into their AI industrial operating system, we can then use it in our factory floors with our partners, for example, Foxconn. And so we're working across this entire spectrum together, and we're going to put the technology to use basically as soon as we can.
What's the net effect for you, Jensen? Is it improves margins, efficient capital allocation? I know that might sound a bit dry, but actually right now that's the answer everyone's searching for. How has this investment in AI and use of the technology actually changed things in the real world for me?
Well, we announced yesterday Vera Rubin. It takes 6 different chips to integrate into this incredible system called Vera Rubin. And when you're done, each one of these Vera Rubin GPUs is 240,000 watts. And it is 10 times more energy efficient than the last generation. It is 10 times more cost efficient than the last generation. But it's still, the technology is insanely complicated. 15,000 engineering years came together to build this system. And so when we accelerate EDA tools, when we accelerate simulation tools, and when we can eventually, and I'm hoping very soon, design entire Vera Rubin systems inside a Siemens digital twin, the ability for us to create much, much more complex systems will scale. We'll do it much more efficiently. And so this is really about being able to do the impossible and being able to do it the impossible right the first time.
And let me add, once we then realize that AI creates real-world impact, this is where it really deploys the full power and also the economic power. It's not only in the data centers or in the AI factories, which we see, but also on the edge, because once you start inferencing with low latency, you bring this technology to the edge. This is a huge potential for our customers to deploy this technology, and this includes, of course, hardware, where we come from the chips. It goes into the controllers. Some of our controllers run on GPUs,
yes.
And then it goes all the way to the
industrial PC.
Exactly.
Yeah.
And we
now these industrial PCs are AI industrial PCs.
We supercharge it, and they can now run algorithms trained in the cloud. They can run it on the shop floor and do all that trick, what we talked about it in real-time optimization and running in a plant, and that makes a huge difference.
Bloomberg's Ed Ludlow there with Nvidia's CEO Jensen Huang and Siemens CEO Roland Bosch. Siemens is currently up 2% on the back, it seems, of that collaboration, that deep collaboration with Nvidia. I know you were distracted by the fashion once again, Guy Johnson.
That was me, yeah. That was me. I was definitely the one that was distracted by it.
It didn't quite get the pop in the share price. I mean, it's up, isn't it? But it didn't quite get the Hyundai effect. They just got a meeting with Nvidia.
A report
of a meeting, and the stock went up by 18% or something, didn't it? Which and memory chips, they went up a lot on the back of the Jensen Huang.
Do you think if you're Roland Bosch, though, you go, I cannot sit next to this man in a suit?
Yeah, we're all tech now.
Yeah, well, we're here in suits. I think
the white T-shirt and jacket look.
Yeah,
that's it. It's coming.
That's what we're going to do tomorrow.
It's coming to a TV studio near you.
Coming up, we're going to take a look at demands out of the United States to take over Greenland. We've got the Zelensky talks as well that we need to be focusing on. We're going to talk defence stocks. Simon Hussein is going to be joining us from Alpha Value. That's next. This is Bloomberg.
This is the opening trade. We are 30 minutes into today's session. The futures have pointed to the gains for European stocks. Right now, flat across the benchmark. Stock 600, Goldman Sachs, Sharon Bell telling us she has a target of 625. We're not going to get there today, of course. We have had 3 straight days of gains so far this year. Currently, though, across the benchmark, not that much to talk about. Lift the hood, there is a little bit more interest. You're seeing defence names once again picking up some steam, and that is lifting the DAX up 0.4%. Here in the UK, the FTSE 100 is under pressure by 0.4%. You can blame that on the energy sector, which is one of the worst performing sectors. And over in France, the CAC 40 off just by 14 points. Guy.
Okay. So nothing at the headline level, but below the surface, Tom said there are things to watch. Actually, when it comes to the kind of breadth of the market, 322 up, 270 down. I'm not sure there's actually much there. What is weird is the volume's all over the place at the moment. Over the last 2 sessions, strong start, then a little bit of a fade. Now we're definitely back in the market, it seems, in terms of early year positioning. Upside this morning, some of the pharma stocks certainly leading the story. They were weak at the beginning of the week. Now they're beginning to bounce a little bit. Roche is up, Astra's up. SAP is also clawing back some ground after a fairly choppy start to the year. ASML, which started strong and is now beginning to fade. Certainly that's a narrative that you want to be watching out for as well on the downside. So let's take a look at the laggards. There's actually some of the cooling companies as well, which are really worth watching out for today. That was a hangover from yesterday on the Jensen Huang comments relating to how easy it's going to be to cool some of the sort of chips going forward for Nvidia. ASML is down by 1%, but the oil stocks are really where the weakness is today. So Shell is down by 2%, Total is down by 2%. Oil prices moving lower on the fact that we're going to see Venezuelan crude going to the United States, Anna.
Yes, absolutely. Let's get more details on that story and others we need to keep across this morning. The US President Donald Trump says Venezuela will send the United States as much as 50 million barrels of oil, worth up to $2.8 billion, which would then be sold with the proceeds, he said, to benefit both countries. In a post on Truth Social, President Trump said the sanctioned oil would be sold at its market price, with the money from the sale to be controlled by him. China has launched an anti-dumping probe into a key material from Japan used in chip making. The Chinese Commerce Ministry says the material being investigated is primarily used in the thin films needed to produce a variety of semiconductor chips. The move was made after Japanese officials rebuked Beijing over trading curbs that threaten to impact more than 40% of Chinese exports to Japan. And European officials have hailed developments on a breakthrough on US security guarantees during a coalition of the willing meeting in Paris. US Special Envoy Steve Witkoff says Ukraine's allies have made significant progress on a plan to end Russia's war in Ukraine. Witkoff told reporters that US-backed security protocols would deter and defend Ukraine from future attacks. Interesting, though, that the markets are trading as if little progress has been made, at least in the very short term, Tom.
OK, from Ukraine to Greenland now, because the White House says US President Donald Trump will not rule out use of military force to acquire Greenland. US Press Secretary Caroline Leavitt says the president is considering many ways of achieving his goal. Officials in Copenhagen insist the island is not for sale. Bloomberg's Lizzie Burden takes a look at why the US is so interested in the island.
3 times the size of Texas, Greenland sits at a strategically important location in the North Atlantic and Arctic. It has vast stores of critical minerals and fossil fuels coveted by the US and its strategic rivals China and Russia. Buried beneath the ice sheets, climate change has made those resources more accessible than ever. And the thawing ice has opened up new trade routes between North America, Europe and Asia. Greenland is already home to the US's northernmost airbase and a radar station that's used for detecting missiles and monitoring space. Gaining control over Greenland could give the US government new opportunities to expand its military presence in the Arctic, as well as access to critical materials to build the economy of the future without relying on the likes of Beijing.
Bloomberg's Lizzie Burden there. Now, for more, we are joined by Sarah Sjolin, Bloomberg's Copenhagen bureau chief. Sarah, it's pretty remarkable, obviously, the threats, or at least the threats of military action not being taken off the table when it comes to Greenland. Secretary of State Marco Rubio trying to be more diplomatic, though, downplaying the threat of military action. We're getting mixed comments, essentially, from the US administration. How is all of this being kind of weighed up in Copenhagen, in Denmark and in Greenland?
Well, at the moment, honestly, we're just trying to keep on top of all the mixed messages that are coming out of the U.S. Just last night, the Danish Foreign Minister, Lars Løkke Rasmussen, was briefing the press after a meeting at the Foreign Policy Committee. And then half an hour later, we have these reports that Donald Trump won't rule out a military invasion. So it's really hard to figure out if we're going A or we're going B. What I can say is that officials are alarmed. I've seen them alarmed in a different way than they were maybe a year ago. So what I'm getting from the Greenlandic government and the Danish government now is they really like to sit down with Marco Rubio. So far, all the communication has happened through us, the press, and there's a lot of frustration that they can't just sit down, talk about what Lars Løkke Rasmussen would say, or some misunderstandings about this whole situation. From we understand, like, this meeting hasn't been scheduled, they haven't met. But what we heard this morning is that the French foreign minister has talked to Marco Rubio, and he, as you rightly say, he's ruling out a military invasion.
Do the Danes feel supported, Sarah, by the rest of Europe? And is Europe prepared to back the Danes, I guess is the question?
Well, I think yes to the first question, and maybe we don't know to the second question. So yesterday there was this joint statement that came out from the big European nations, a joint statement that said that they're really backing Denmark. They're also Denmark and Greenland. They're also reminding Trump and the U.S. that Greenland, because it's part of the kingdom, and Denmark is a NATO member. So all the charters, all the rules that are in international law from this, they also apply to Greenland. So that's, I think that statement, it was, I won't say a game changer, but it was a really big step for Denmark to see that they are backing them and trying in a historic way to also showcase this division within NATO. As to whether the European nations will back Denmark when it comes to show, we don't know.
And as far as Greenland is concerned, Sarah, they want this to go to talks, really, don't they? I mean, we had a statement from the Greenlandic leader yesterday saying threats, pressure and talk of annexation have no place between friends. Enough is enough. We are open to dialogue. We are open to conversations. That's surely where this has to go next.
Exactly, and I think that's the point that the Greenlandic and Danish government are trying to get across. Let's have a dialogue, let's have a conversation. Both the Danes and the Greenlanders, they've said for a year now, we're open to more business. If you like to have more military bases, you'd like more material, all you really have to do is call. There's already this defense agreement between Denmark, Greenland and the US going back to 1951. So I think the sense over here is there's a lot of questions. Why don't you just call and ask? Could we sit down and have a meeting? Where right now it just seems like there's a lot of drama going on in the press, but the diplomatic channels aren't really being used. And that's what the Greenlandic and the Danish governments are trying to get in at now.
Sarah, thank you very much. Thanks for the update. Sarah Scholin, Bloomberg's Copenhagen bureau chief, certainly having a busy few days on this particular story. Joining us with a slightly wider lens across the defence space, let's talk to Salma Hussain, who is aerospace and defence equity analyst at Alpha Value. Salma, it's very nice to have you with us. So we've seen a lot of appetite from international, perhaps European investors for European defence names at the start of this year. Is that based on new geopolitical tensions, do you think, or is this just the ongoing assessment of what Europe is going to have to step up and spend on its own defence?
So I believe that this is really due to the geopolitical tension we are seeing worldwide. For instance, taking the example of the Venezuelan episode, it is a Latin America event, but actually it reinforces the idea that U.S. security might become more transactional and more unilateral, even towards allies. So that means that Europe has understood that it needs to be able to act with or without U.S. support. In other words, Europe, the floor under European defense spending perceived by investors is increasing, actually.
And so, Simon, does this result in more defence spending as a whole in Europe? One assumes yes. What's the balance between how much is spent on US defence products and how much is spent on European defence products in the short and the medium term?
So right now we are roughly at around 65% of European defence spending going into the US and 35% going into Europe. With everything that is happening, I think that the market is trying to assess the possibility that it will be more 50-50%. So European countries will eventually understand that this dependence on the United States actually has a political cost. And this is the reason why we might see not an increase in the headline numbers of defense spending, so we will stay at this roadmap of 5% of GDP by 2035, but an increase in the percentage of the spendings that will stay in Europe.
Okay. So if there is a deal done with Ukraine and Europe provides a security guarantee, does that mean that we need to spend more, or again, does that come out of the 5% that we currently spend?
So I don't think that it means that we have to spend more. Actually, it will change the nature of the spending. I think that we really need to focus more on electronic warfare, on command control system, where Europe lacks capabilities. Yeah. And so we will use the money to modernize the armament in Europe.
Have we got to the point where, and this has been the debate for decades, that Europe builds too much of the same stuff? We build too many fighter jets, we build too many tanks of different varieties. How close are we to rationalising European defence spending?
I think this is a very good question, actually. So, for instance, taking the example of combat aircraft, so we have two competing programs, while the United States only have one big program, which is the F-35. I do think that unity is key for European countries, so that we have more economies of scale and we are more efficient. Now we are seeing a trend of a lot more partnership, joint venture. So we can mention Thales Alenia Space, Airbus, and Leonardo joint venture, or the joint venture between Rheinmetall and Leonardo. So there are some mechanisms to increase the unity of Europe. Now it is a key point that Europe should work on.
Simon, increasingly the funding, at least a portion of this funding on defence, is going to, not to public markets, well, it is, majority is still going to the primes, but then there is a significant smaller portion that's going to kind of venture-backed companies as well. To what point do some of these defence tech startups start to pose a challenge to the primes?
I think that we have a technology gap with the United States for sure. And I do think that private innovation is a way to narrow this gap. And so we have seen a lot of private and venture capital investment. So we are talking about 5 billion investment in 2024 against less than 200 million back a decade ago. And I feel like for listed prime, the key idea is to integrate this private innovation and to try to do some partnership, acquisition, so that European primes can still compete with US technology.
And which parts, before we let you go, which parts of the defence space are you most constructive or optimistic on right now, Simon?
I think I already kind of answered this question, but I would say really electronic warfare and also on drones. I believe that Ukraine war has shown us that drones are really, really important, knowing that a low-cost drone can threaten or neutralize a multi-million dollar assets. So I feel like drone is a key area for European defense spending, air defense, and everything that is related to that. So I think that there is a rotation within the sector that should be done from weapon and ammunition supplier to electronic warfare names, and with a strong focus on air defense and drones. Yes.
Simon, great to catch up. Thanks for the insight. Really appreciate it. Simon Hussein, Aerospace and Defence Equity Analyst, joining us out of Paris from Alpha Value. I want to take you to Paris from Paris to Brussels. This is what it looks like in Brussels this morning. Are you feeling kind of cosy and warm inside, which I am in this nice warm studio? Spare a thought for those going to work in Brussels this morning. It looks fairly chilly.
I mean, we've got the Brussels live shot. I'm sure there are plenty of parts of Europe where we could have found similar imagery causing similar levels of disruption. The good news is it gets warmer, wetter, but warmer towards the end of the week. But then I just read that gas prices are going higher because it's looking cooler for February than we'd anticipated.
Oh, OK, so there's gas price moves higher. I don't know if I want warmer and wetter. I think I prefer snowball material there.
My kids would definitely be much happier with the kind of weather. The wind looks a little strong.
Coming up, which AI adjacent stock has rallied 1,000%? 1,000% since April. This is a hard pivot, isn't it? From snow to 1,000% upside. Which AI adjacent stock has seen a 1,000% rally since April? That is the name, the number of the day. The answer when we come back. This is Bloomberg. Welcome back. So before the break, we asked which AI adjacent stock has rallied 1,000% since April. Drum roll. The answer is SanDisk. The memory and storage company stock has been on a tear, leaping more than 47% just in the first 3 trading sessions of 2026 and soaring over 1,000% then since April. Memory companies back in the spotlight, of course, after the leaders at CES highlighted the importance of the providers to the AI industry. Jensen Huang, of course, foremost in terms of the commentary around the need for additional memory, and that led to a broad gain for many of these memory-linked companies, and SanDisk has been one of the best examples of that. And Anna, it is a reminder, of course, that we can look beyond, at least the argument would be from some, that you can look beyond the likes of Nvidia and AMD further out to some of the other gainers and the remarkable upside that's come through. Yeah, absolutely. So Jensen Huang is short of some memory storage then, Tom. You're going to dig around at home and lend him a few memory cards. Is that the plan? I think we can all dust off the old US SanDisk thumb drives and memory sticks and see if there's additional value to be.
I'm waiting for the market in old cables to come back because I've definitely got lots of those. You've got loads of those lying around. OK, we're all here for this. Right, let's talk about oil because there's a lot to say about the oil price. It's dropping this morning. Oil extending losses after President Trump says that Venezuela will send the US as much as 50 million barrels of oil. The cargoes, which are worth around $2.8 billion, would then be sold, with the proceeds benefiting both countries, according to President Trump. That comes as Chevron sends 11 ships to the South American nation to export its crude. For more, we're joined by Mitchell Furman, our oil reporter. Mitchell, very good to have you with us. So how significant is this? Because it wasn't clear if this is just a one-off or if this is a change in the structural flow from Venezuela. What do you make of it?
Right. I mean, this is a lot of barrels, few details at the moment. It would represent a couple months' worth of production from Venezuela. The Gulf Coast refineries in the U.S. tend to like this Venezuelan heavy crude. We'll see what the details say. President Trump is potentially scheduled to meet with oil companies in the White House next week. Energy Secretary Chris Wright is at an energy conference in Miami this week where he might be meeting with energy executives as well. So they're still trying to figure out the details, but we don't, Chevron is continuing to operate uninterrupted, they say, in Venezuela, and we'll hopefully get more details today about the barrels.
It's got a whole load of ships on the way already. How big a lead does Chevron have?
Yeah, Chevron certainly has a lead, not only with the operations, but just the relationships in the country. I mean, even Maduro, he said Chevron's going to be here for another 100 years. So the country trusts Chevron.
Right. The FT is also reporting about a tie-up potentially between Chevron, talking of Chevron, and Quantum Energy Partners. What is the significance? What's the nature of this potential deal?
Yeah, Lukoil, one of Russia's biggest oil producers, was sanctioned by the U.S. in October, and they were looking to offload their international assets, which is plentiful. It's about $22 billion worth, according to the FT. It's a sprawling business. It includes downstream, it includes retail, it includes a trading arm, producing assets. And so Chevron is splitting this with Quantum, according to the FT. And, Lukoil needs to offload this, and so we'll see if it goes through.
OK, that energy dominance from the US with Chevron at play in Venezuela, but also around those Russian assets. outside of Russia, of course. Mitchell Furman, our oil reporter, thank you very much indeed. Another busy day for the energy space. And Mitchell breaking it down for us. Here's what else to think about today then. On the data front, 10 a.m. UK time, we're going to get Italian and Euro area CPI, and inflation generally across the Eurozone has been pretty comfortably around that 2% target for the ECB. 1:15 p.m, we're going to get ADP employment data. 3 p.m. UK time, US ISM Services, Jolt's job openings, and later we're going to hear from the Fed's Michelle Bowman, of course.
Yep. Labour market in focus, firmly in focus. We're building up to the payrolls. That's the kind of the beat that we're working to now.
Yeah, didn't you miss it in the last 4 months? You know, now we finally have a regular data schedule.
Do you know what? Weirdly, I thought about it today, and I was like,
it's comforting.
Yeah, it kind of feels like I haven't had one for a while, and it's nice to have a
This will be a clean number, will it?
Well, that is the expectation. That Friday's payroll report will have less of nuances, less noise in it than the previous ones had. It will be a survey of December, obviously, and that's when the BLS was back fully functioning. But today it kicks off with ADP. We are expected to see a positive number from ADP, which is surprising given it had so many negative prints last year, an expansion of 50K. We also get the Jolt's job opening survey, but remember that is for the month of November. It's 1 month delayed. So probably
we were still in shutdown at that point.
Coming out of it.
Coming out of it.
Now I think most of the attention might be on ADP. There has been a lot more attention on these ADP weekly numbers that they've been releasing. But this is all headed up to Friday's non-farm payroll release, where we are expected to see a tick down in the unemployment rate. It rose to 4.6% last month unexpectedly, and economists are now, the consensus estimate at least is for it to tick down to 4.5%, which might confirm that the Fed is on hold at least for the next few months. And we've seen trading activity in the market really chime with this. Yesterday was actually the largest ever Fed funds block trade ever done. It's a new market though, Fed funds. So, but on January, which did look like an unwind of a long position. So someone out there is less convinced that the Fed has any need for immediate rate cuts and wants to unwind a position ahead of payrolls.
Well, that is interesting at the margin, isn't it? And what that tells us. What about the other risk for Friday? That is possibly a decision by the Supreme Court on the IEPA tariffs, the emergency powers that President Trump used to bring in some of these tariffs.
Yeah, this one could be quite juicy. I think there is going to be a lot for the market to parse through. The decision isn't necessarily going to be struck down or upheld. There's going to be a lot of nuance. They might kick some of these decisions back to the lower courts. But I thought what was interesting in the price action yesterday, when we did hear that the Supreme Court was convening for opinions on Fridays, we did see some weakness in the Treasury market. So there is a kind of a thinking out there in the market that if IEPA tariffs are struck down, these reciprocal tariffs are struck down, there's going to be a hole in the U.S. deficit because you have to pay back that tariff revenue, and that could lead to more pressure on Treasury issuance, just more pressure on deficit worries, which could lead to yields being higher. Now, whether that actually comes true to the case on Friday, I think will depend on how clear-cut the decision is. But I think it's the worry around the deficit that is more attached to the Supreme Court case and the worries over inflation.
Switching, we've been talking about the memory chip rally. How clear is the runway for further upside there? What are you looking for when it comes to that story?
Look, there is a catalyst tomorrow. We do have Samsung's preliminary earnings. They are likely to hit before we get in tomorrow, so around midnight London time tomorrow. Analysts are expecting to see a doubling of operating profit for the December quarter. A lot of attention is going to be on the guidance. What are they thinking about memory prices headed forward? What do they think about the shortage of their industry? And to that note, we did have a pretty whopping number from a Taiwanese memory chip producer who saw a December sales climb of over 400%.
Now, that's a big number. Valerie, thank you very much. Valerie Seisel, our markets reporter, of course, with the latest on a host of factors that we're watching this week. Stay tuned. The French Prime Minister, Dominique de Villepin, former Prime Minister, of course, joins the Pulse. That's shortly. This is Bloomberg.